speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is November 1st. I opened up the room early just so I can go through some of the disclaimers and the stuff that I have to go through before I present. All right. So if you're someone that's been here, returning person, if you wanted to get a cup of coffee, that's fine. I'm going to take about 10 minutes to go over the disclaimers that I have to talk about. And then I'll get into the setup and we'll get into the live trading bit. Okay. Let me move the live trading account down. Let me do this. Yeah, so that's kind of the game plan. So what I'm going to do, disclaimers, go over the setup, then we'll hop into the live markets and we'll try to pick them apart using the principles outlined by CFRN. Okay. So those that are brand spanking new and they're wondering what CFRN is all about, this is going to be a great syllabus for you to use when going into the live trading room, because I'm going to go over the setup, some of the buzzwords, some of the stuff that Michael is going to talk about inside the room. So when you pop in there in day one, you're not hit in the face with a whole bunch of stuff. Okay. You might be able to, extract any information from them. And then when that trial is done and you get an offering from CFRN, at least you have more of an eyes wide open approach on your decision whether you want to pursue this path or not. Okay. Guys that are already CFRN members, I'm glad you guys are in, because you guys are going to spend a little bit more screen time. I'm going to talk about some of the things that, some of the traps that people fall in, and share some observations throughout the program, things to look out for. And what we're going to do is basically create habits, a process that you should be going through for each trade. So in other words, when we look at a setup, the things that you should be doing are creating good habits. In other words, hey, training my mind to 1, are we trending? 2, do we have a cross, bullish or bearish cross? Number 3, activate the trend line. Number 4, are we draw the trend line? Number 5, and kind of go through the sequence and get you in the habit of going through that. So then when something does fire, then you're in a position just to push the button inside the DOM and take action. Okay. I think along the way, as you get comfortable and confident, it does take some time, but the idea is to get you to that point where you're comfortable in seeing everything and you're confident to actually push a button. Okay. So that's a scoop. So let me do what I'm supposed to do from a compliance standpoint. So let me get my little marker out here because I like the marker. And the first order of business is talk about the disclaimer. All right. This disclaimer really is for the new guys that are entering into our space futures. Okay. And it's highly leveraged. So that's why they like for us to put this tagline on everything, because what this basically says is you can lose everything and some in your trading account if you're, if you don't have a trading plan, if you're not using stop losses, if you're not watching the market, if you're not in tune on what's going on in your trading account, if you walk away from the screens, if you neglect all that, this disclaimer is going to hit you right in the face. I've been doing this for almost 25 years, so I have seen the good, the bad, and the ugly. Okay, so that's why I don't throw the disclaimer up there and say, hey, take a look at it and then drop it down. I'll take a few minutes just to highlight it so everyone's aware that this is a reality and this could happen. Okay, the good thing is about CFRN is that you are going to have a set of rules. Okay. Every trade has an 8-tick stop attached to it. So you're using the stop loss. They use aggressive risk management, so you have to be engaged in what the market's doing. Okay. You also have to be in front of the screens because you have a set of rules that say, hey, if the market goes plus 4 ticks in your favor or closes on the other side of the MA1, you're going to move the stop to break even. You have things in place that keeps you in front of the screens and in the market. Okay. So it kind of waters down that disclaimer. All right. But in the end, if you do all the right things, you place the stop, you're in front of the screens, you have this trading plan, and some goofy tweet comes out, let me minimize that, and the market goes haywire and jumps over the stop, at least you're in front of the DOM, and this is the DOM, okay? This is where we buy, and this is where we sell, okay? At least you're in front of the DOM, you can hit exit at market and cancel. Okay, you can get the heck out of Dodge quickly. All right. So again, the disclaimer really is for the new guys entering our space. It's there to scare people for good reason. Okay. Usually, the guys that get to us, get to the CFRN room, man, they've been bruised, beaten up, picked over a little bit because they've been to several rooms and several gurus. And the disclaimer, they're numb to it. That's what it is. Okay. It's like I said, it's for the new guys, okay? Because they don't know any better right now. They're probably got an email or they're getting those YouTube videos from James Bond or the guy that's saying he's killing it in the market all the time. They're getting all this marketing stuff, and now their juices are boiled up a little bit, and they're wondering, all right, what's all this stuff going on? Okay, so that's the long-winded explanation of the disclaimer. Okay, this one, my relationship with CFRN. No, I do not work for CFRN. CFRN, as outlined here, is a third-party application, indicator, software, trading tool, educator, all that stuff that's highlighted here. Okay, they're a third-party vendor. Okay, about 8 years ago, I ran into Dwayne. Dwayne was just doing the radio program, maybe even longer than that. And he said, look, why don't you come on the radio, share some of your knowledge, talk chats, talk about the markets, offer some opinions. Our viewers are just interested in knowing a little bit more. That's how the relationship started, just on the radio. Then the demand for Dwayne to teach people how to trade and use his indicators and his methodology kind of really started, okay? I use DT Pro. That's the platform that we're featuring here today. That's the platform I support. I support the platform, the execution, the brokerage. If you decide to go down the CFRN path and use DT Pro, this is what you're going to look at. Okay, their indicators are built inside our platform. Our platform reads easy language. So 8 years ago or 10 years ago, it was a perfect fit, pretty much perfect timing. Okay, we can offer a platform that's free. All right, and guys can use it. They can learn, and it's a cheap way to do it. And you know what? This platform has all the bells and whistles. Okay, so it was kind of a perfect fit. All right. Since then, I've been hanging out in the room just about every single day. When Michael's out, I point out I'll make some observations if I'm not on the phone. If you guys have tech questions during the time, I'm in there to talk about it too. So if you decide to go to CFRN, down the CFRN path, no, you're not going to send money to me. That relationship is between you and them. Anything on their website, like the videos and the members area and the Thursday night workshops, Logic 247, the daily doubles, anything on their site, you're going to talk to them directly. Okay? A lot of times, Mike and Dwayne are just tied up. You guys know I always pick up the phone, so you end up calling me, which is cool. I can always get a hold of Mike and Dwayne and say, hey, you know what? Joyce is trying to get a hold of you. Give her a call. Okay. And so that's how the relationship kind of works, starts, but there is a fine line in between the two of us. Okay. They don't share in the commissions and all that stuff. That's illegal. They're not licensed to do that. That's always a big question that I always get. The good thing is they never asked, which is kind of cool because that tells me they're trying to do everything the right way. Usually you get approached by some guys and they want a share of everything, and you know their best interest is not trying to educate people and trying to teach them how to trade. Just 25 years of doing it and running into people along the way. So that is the long-winded explanation on that disclaimer about my relationship with Dwayne and Michael and CFRN. The thing is that if you do business with Daniels and myself, I'm going to try to spoil you. That's why I do CFRN Thursday. There is a demand for guys to say, hey, look, slow this bus down and show me in slow motion what's going on. All right. I learned a little bit better that way myself. A lot of things are going on in the training room. It's fast. You know, you get kind of caught up in the emotions of everything. I'm a guy that likes to really dissect what's going on before, you know, I even buy something or get my hands dirty or put money at risk. So that's a scoop there. All right, this is live. I do have people calling in, so I'm gonna, from time to time, I might hit the mute button. This is one of those times, so don't go anywhere. Big question of the day. What do I think about the crude oil? What do I think about the crude oil? What do I think about the crude oil at $63 a barrel? Anyways, like I said, people are going to call in and they're going to ask some things. So I'm going to have to put you on hold for a few minutes and might have to take a few orders. Okay. So let's pull the car over for a second. All right. I just went over the disclaimers. All right. So if you're just popping in, perfect timing. You don't have to listen to all that. I sound like a broken record a lot, but that's the whole idea, is to train your eyes to get you through a process of thinking on how to look at the market. Okay. So that's what we're going to do. So we're going to start from scratch, and we're going to go over the setup. Okay. Those guys that are brand spanking new, again, this will be a good time for you to ask questions and see some things in slow motion. Okay. All right. So let's do this. First order of business, okay, is the time frame. Okay, 4-tick range chart. All right. Few things to be said about that. Number one, if you have DT Pro, you might be on a daily chart. Okay. The way you get to the 4-tick range is you hit the drop down box, go down to custom, and select range bar. Make that one look like a 4, and you're on the correct time frame. Okay. One of the big holes that people fall into is that they'll come down, hit the custom, and select the tick bar box. And they'll change that 2 to a 4, and the chart looks goofy like this. Okay, if it looks like this, you know you fell into the trap. Okay, go to the 4-tick range chart. Okay, range. Why a range chart? The height of each candle is 4 ticks in height. Why is that important, Bert? A lot of times in the room, you're going to hear Michael rattle off numbers, right? Highs and lows. In other words, I'm looking at an ES chart here. Okay. Okay, you might hear him say, hey, the high is 27.32.75, then the low should be 31.75. Okay, you're going to hear that a lot in the training room. The reason why he's doing that, and one of the reasons why he's got the 4-tick range chart on, is he can be proactive. Proactive to you and I means he could be placing orders to enter the market, okay, placing orders to enter the market on stops. Okay, the market's going to stop him into the trade. Okay, so in other words, if we're here at 27.29, he would right click in the green above us and stop him in with some momentum to the upside, or he might right click in the red, because we're selling underneath the current market, and stop him in on the downside. Okay, the magic equation is this. This is the easiest way to understand that. He's going to start rattling off numbers. If you just add or subtract 5 from the high and low of the current bar, okay, that is the number you right click on. Okay, that is the right number you right click on in the red or green. Plus or minus 5 from the high or low. Okay, now that's a lot to digest on day one. Like Mark and some of the other guys, okay, that's probably level 2 stuff. Get used to the trading. Get used to the rules and learning what everything means before you get aggressive and start trying to buy and sell stuff on stops. That would be my advice first. Okay, when things start slowing down for you and you get to the point where you can navigate on this DOM. Okay, the DOM, by the way, is this tower here. Okay, once you get used to that, then you can go to, the level 2 with what Michael's doing. Okay, a lot of the trades that you see in the training room is done that way. Okay, but we're trying to break that down to its simplest form so you get, an understanding of what the heck's going on in the room. Okay, so first order of business is the time frame, which is the 4-tick range chart. All right. Step number 1, the bullish or bearish cross. So here we go, some buzzwords. The red and blue line is referred to as the MA1. Okay. The green line is referred to as the BBC. That is short for bullish bearish cross. Together creates step number 1. Okay. So when the MA1 crosses the BBC, as it does here, and here, and here, okay, that is step number 1. If the MA1 is red, okay, that is a bearish cross. If the MA1 is blue, that is a bullish cross. Again, the one that's highlighted here is a bearish cross. Why? Because the MA1 is red when it crosses the BBC. Okay, it's red. So from this point on, I want you to start thinking about colors. Okay, because in the end, the highest probability trade is when everything is the same color. Okay, when everything is the same color. So we'll go through that. All right, and I'll point that out. So that's going to mean if you just said, hey, that's the one I want, hey, great idea. That means less trades. Okay, you're not going to always see the perfect trade setups. That's up to you. Okay, it's fine with me, but it may be different for you. You might be looking for something, setting up all the time. In the training room, Michael's looking at 2 or 3 different variations of this. Okay, but the bottom line is step 1, that match is lit when we have the cross, when that MA1 is crossing the BBC. This is a bearish cross because the MA1 is red. Okay, after the cross, we're looking for step 2. What is that? The normal thing for the market to do after the cross is to gravitate or flag or move or challenge this green line or the BBC. That is the normal thing for the market to do. Okay, you are looking for normal. When it does that, when it gets up to the BBC and then closes in the direction of the trend, guess what color that candle should be? It should be red, right? When this candle is red and closes in the direction of the trend, And we identified the trend being bearish in this example because the MA1 was red. That is step number 2. Okay? So we look for normal. Market gets to the BBC and closes in the direction of the trend. If it was a bullish cross, we would be looking for the market to come down, touch the BBC, and then have an up close or a green candle or a blue candle. Close in the direction of the trend. The trend is set by the MA1 after the cross. Okay? All right. Step 3. Step 3, we're going to work on the bottom portion of here of the chart, the slingshot or the oscillator portion. It's called the slingshot. Okay? Some buzzwords here. The blue and red line is the cycle. Okay? The green line is just the green line. Nothing special about it. Okay? When Michael refers to, in the room, it's referred to as divergence. Now it's being referred to as separation. The idea is this. Okay? The green line, when the green line is pulling away from the cycle, as it does here, let me blow this up a little bit. Okay? When the green line is pulling away from the cycle, the space in between here is referred to as the divergence that Michael is talking about in the training room, or the separation. Because here's what's happening. Okay? What this is saying is that the trend is down in this time frame, 4-tick range. Okay? With the green line pulling away in this downtrend and the price action doing the normal thing and then closing in the direction of the trend, the combination of the two are the two variables that say, hey, you know what? This might be just an air pocket in this ongoing downtrend. And the downtrend is being defined by not only the bearish cross, which is a red MA1, but a rejection of the BBC with a red candle, and also now a red cycle, all right, telling us the trend is lower. You're getting kind of the hint. That's the common denominator. Everything is the same color, all right? And when all those things are present, and if we're trending, there's nothing left to do, okay? There's no more filtering. At that point, you go inside the DOM here, and you left click. Okay, you get short. And the way we make money is if we left click in the red, we want prices to go down. That's how we make money. If we get a bullish indication, we're going to left click in the green. We make money if the market goes up. All right, that's what happens. So in a nutshell, actually the trade exists down below. All right, it's down here because here's what we expect to happen. The trend is down. This price action and the close in the direction of the trend and this pull away, okay, that's normal. What we expect to happen is this green line in the end to come down and close the gap inside the cycle. And it's at that point, what we expect is the market to make a new pivot low, and this is the point in which we get out of the trade. Okay? And in the end, we expect the green line to do this. Until guess what? The cycle turns blue, and now we're looking for the green line to get underneath it and create bullish divergence or bullish separation. All right, so actually the trade exists down here. Okay? In a perfect world, what we're doing is selling that rally, selling that rally, selling that rally, and now we're buying this dip, buying this dip. Okay? in a perfect world. Now we know the markets aren't perfect, but that's where it sits, right there. The trade exists there. Okay, so in the end, you're here on day one, you're learning what the heck is CFRN about. You're not learning to pick the top here, you're not learning to pick the bottom here, and you're not learning to trade it from point A to Z. What you're learning to do, take a piece out of the middle. Okay, this is where you sit. All right, and along the way, every trade has an 8-tick stop attached to it. So if you're wondering, hey, what does that mean to me? Monetary terms, if you're trading the gold or the crude, if you're dead wrong, you're losing $80. If you're trading the soybeans or the S&P, it's closer to $100. If you're trading the mini Dow, it's $40. Okay, you're looking at the market under a microscope on a 4-tick range. Okay, you're using aggressive risk management. Okay, so what you're signing up for is staying in front of the screens, rules-based trading, aggressive risk management. So that means a lot of trades, means possibly a lot of stop outs, possibly a lot of break evens. Okay, so that's what you're signing up for. Okay, in the end. All right, so what we're going to do, what we went over here, we're going to take that and go inside a live market and put it to the test. Okay, now, as I said, I'm going to make some observations along the way. And you guys could ask questions. All right, so let me take this live one down so I don't screw it up. I'm working off the demo. Okay, it says demo in here. Allows me to push buttons and all this stuff. The other platform I just shut down is a live platform, and I got other accounts in there, and I don't want to goof it up. All right, so that's the scoop. Ready? Here we go. The first order of business. First thing you should be asking yourself, are we trending? Period. That's the first thing. What I want you to do is get in the habit of hitting this red magnifying glass. Okay? I want you to zoom out. I want you to get in the habit of doing that, because when you're looking at Michael's chart, sometimes you're seeing this. You're saying, man, this thing is trending. We have a bullish cross here. The MA1 is blue and crossing the BBC. Okay? That means you're looking for bullish opportunities. But if you take a moment to zoom out, okay, you might find, hey, you know what? There's some resistance here. Are we really trending? And right now, I would say no. I'd be really careful because we have some resistance here. All right, that might be the difference of you being in a good trade or not. This could take you out of a bad one. Just take a few minutes to zoom out and look left. All right, and in the end, if you're not sure, then don't take the trade. Period. Don't take it. In a 4-tick range chart, you're going to have several opportunities, right? So don't take the trade if you're not sure about it. All right. In any event, a lot of good things are happening with this because we do have the bullish cross, right? So what we expect to happen, the market to gravitate toward this green line or the BBC. All right. The cycle is blue. So that's good for the home team if we're looking for bullish opportunities. We want this green line to get underneath it. So what will happen is if the market does come down and flag or gravitate toward the BBC, the green line will get underneath it. All right. And it will provide that bullish opportunity. All right. Mark's asking about the red resistance dots. Okay. This is dynamic resistance when it's red. When they're green, that's dynamic support. Okay. On the traditional slingshot setup, that's this one here. When the normal happens, okay, it tries to pull back to the BBC. Okay. As long as they're doing the traditional setup, that's fair game to take into resistance, dynamic support, or resistance. But the takeaway from that too is you might say to yourself, look, I have a hard time figuring out whether a market's trending or not. You guys talk about trending like it's some easy little thing going on. It does become confusing, and I get that because I get a lot of questions on it. Okay, the dynamic support and resistance level, again, markets, these dots here, the guys that are brand new, if you zoom out and you see this, they're side by side here, that's a good indication we're just chopping. Okay, so not only can they be used as support and resistance levels, but they also can give you a sense of whether we're trending or not. Okay, so put that in your back pocket. All right, if you're not sure, look at the dynamic support and resistance dots and see what they're telling you. If they're side by side, no trade. And when in doubt, stay out, period. Okay, so that's what they're used for. So if the market does pull back to this green line here and it sets up, as long as we're trending, it's fair game. You can buy it. Okay, Mark? The red resistance dots in momentum trades. I'm not going to try to get into that too deep, but if it does happen, I'll point it out. But that's when the resistance dots come into play. Okay? If we have a momentum trade, that means if we enter on this side of the MA1, okay, if we're bumping our head against resistance, that's a disqualifier. We don't want to do that. Okay? So that's the deal. That's correct, because it has some room to go before it hits the red resistance dots. That's correct. What you can also get excited about, too, is if we start breaking red resistance dots, that should give you some confidence. You know what? Resistance is being broken, and maybe now we're starting to trend. Okay, so that's another observation to take from this. Okay, so they can be used on various different levels. So for the moment, the ES is off the table, and still we start running here. Okay, actually we might be doing it now, so stand by. This would be pretty cool if right out of the gate we start running. So look, I got in the habit of zooming out, right? So we are above dynamic resistance. Okay, so there's some room to buy this thing on a pullback. So we got to like the fact that we have the bullish cross. That's good. So the market's trending, and we have a bullish cross. Next order of business is to activate your trend line. Okay, notice how I do that with DT Pro. Left click on it, activate it. Why are we going to do that? Because the normal thing for the market to do is get back to the green line, the BBC, right? All right. We draw trend lines for a couple of reasons. Number one, if the market has so much bullish momentum in this case, it's not going to get to that green line. It's going to pull back a few and take off. Okay. If it does that, we're going to jump on it. That is why you draw the trend line. Okay. Be proactive in advance, get in the habit of drawing the trend lines, because if it does happen, you're in a position to go right inside the DOM and push a button. The other thing, and I hope it does happen, is if the cycle does turn color on us. Okay, we know if the cycle goes, ideally we want it to be blue, right, in a bullish opportunity. But if it starts turning red on us, that's watering it down, the probabilities. It's still fair game, but it requires that trend line to be drawn. And if you get in the habit of doing it ahead of time, and it does happen again, you're already in position just to push a button instead of fumbling around trying to draw a trend line at the last minute. So the point of all that, as soon as you get the cross, I want you to activate the trend line so you're ready to rock and roll if it happens. All right? So here, let's see if it happens. So we need 2 red candles. Okay? It takes 2 candles to connect the dots. Okay? So let's see what happens. So we're looking to buy the S&P on a pullback. Okay? So let's see. Any questions with that? Why we're trying to buy this thing? All right, so there's one red candle. See how the green line is now pulling away? The separation. Okay, the green line's blue, the cycle is blue, and the green line is underneath. Okay, that's bullish divergence or bullish separation. Okay, another down candle. We're going to draw a trend line off the top. Come on, give us a red candle. Make this real easy for us to say. Perfect. Look at that. All right. So, two red candles, bullish divergence. All right. So if this does fire, we're going to go inside the green and left click. All right. Now here we go. This is what Michael will do. The low is 27.34. Okay. Then the high has to be 27.35. Okay. So it's going to have to go to 27.35 and a quarter to qualify. You would right click in the green and place an order to buy it on a stop. Okay. That's how you do that trade. All right. So let's count it down. The low is 33.75. Then the high has to be 34.75. So now you're going to right click at 27.35 and you're going to buy it on a stop. Let me be clear. Right click in the green. You're placing an order to buy it on a stop. What I hear from a lot of people is they're left clicking in the green and they're getting it out right away. Okay, that's not what you want to do, because then you're placing a limit order on accident. You want to right click and place a stop. Okay, so let's see what happens here. Okay, the low is 33.75. Okay, the low is 33.5. So it has to go to 34.5. So our new order now is 34.75. Notice how I've drawn the trend line off the tops and the wicks. Okay, the low is 33.25. The high should be 34.25. Our new order, 34.5. Take the low and add 5. Take the low and add 5. That's your number. Okay, the low is 33. Our new order is now 34.25. The cycle is still blue. We still have the divergence. Okay, there is the up close. We have not closed above the trend line. Okay, we're in. So here we are. We are in. Okay, now, the cool thing about DT Pro is this. Okay, once you get into a trade, all right, you can automatically place a stop loss. Okay, if you check the buy stop and the sell stop button, and you hit right click and do factor in ticks, right click, factor in ticks, and make these 8s, as soon as you get into the trade, it's automatically going to put your stop loss in behind it. So that's one less button you have to push. Okay, that's one less button you have to push. All right, so we got in at 34.25. We didn't get in above the trend line. Okay, that is my mistake. I was giving you too much detail on how to enter this thing on the buy stop. Ideally, we want to close above this downtrend. All right, and not only that, we have to adjust for that high. Okay, so let's see. So now the cycle has turned red. That is the up close, ironically at the same level where we got in anyways. All right, that is the up close. This, okay, the trend line was required because the cycle turned red. Okay, that's okay. All right, so we have an 8-tick stop attached to it. No, the cycle can be red. It can be red. It doesn't matter if it's blue or red. Ideally, we want it to be blue, but if this turns color on us, fine. It's down here you have to pay attention. This is good. This is what we want to look for. Okay, this is not necessarily good because it waters down the probability a little bit. Okay, what you're referring to, Mark, is if this red cycle starts curling over at a 45-degree angle, that is the disqualifier. So no, This is where we got in. The good thing about DT Pro, it'll put it right on the chart. We got in at 34.25. It's also on the DOM. It's also on the chart. It's also right here, and your P&L will be moving at the same time. So there's several places where you'll know where you're long from. Okay. All right. So now we're still at break even. There might be that close above the MA1. Let's hope so. So money management rules. The market's going to have to go to 35.25 before we can move our stop to break even. Okay. Notice we're back under. We poked our head above it, but we're not closing above it. So right now our stop is still the same. Okay. So hold on. I'm going to mute you guys so I can answer this line. All right, I'm back. So we're still waiting for the market to respond. All right. I'm glad this also happened. There's the close above the MA1. All right. Technically, your stop should be at break even, correct? But you're long from 34.25. Okay. That is going to happen. Okay, so hold on. Okay, the bottom line is we're stopped out. Come on, guys. All right. So let's review what just happened. And you notice how the cycle now is curling over. That's usually in response to what we just saw there. So one sec here. All right. So anyways, that was a valid long setup. Okay. So the match was lit there. Okay. And then we were stopped out down here. Okay. So now we're looking for the next setup. All right. Let me get rid of this trend line. All right. So now we got a bearish cross, right? The MA1 is crossing the BBC, and now we're getting a pullback. We get the bearish cross here, and the market's doing the normal thing. Pull back to the BBC. Draw the trend line. All right. Do we have bearish divergence? Yes, we do. The cycle is red and the green line is above. So the question is, are we trending? Right now, no. Okay, we're stuck in this little chop zone here. So for the moment, it's got a lot of the variables. The bearish cross, pull back to the BBC, and potentially a down close here. But because we got a little bit of support, and you see where the green support, dynamic support dots are printing in, right now, I would avoid that short, no matter what happens from this point on. But the cycle is red, okay? The 2 points and where you start drawing the trend line starts here. Remember, it takes 2 green candles in this example, okay? This is the candle where it starts. Okay, Mark is asking. Okay, it started like this. Now it starts like this. Okay, there's the down close in the direction of the trend. There is step number 2. Step number 3 is present. Step number 1. Okay, so again, I zoom out. Okay, are we trending? Now we're kind of congesting here. Could it fall apart? Yes, it could. It could result in a great trade. All right, but you got a lot of support you're fighting against, so you need to be careful. But that has a lot of the variables to it. Okay. All right. And there it goes. It's starting to go down. All right, so let's move on to a different one. Okay. Crude oil, December. Okay. This is an easy one to look at. Are we trending? No. I mean, this one's hits you right smack dab in the face. As I said earlier, okay, look at all the dots. Look at the top here, the top here. Dynamic resistance, side by side. Dynamic support, side by side. That's just a hot mess right now. So the crude oil, until it breaks out of that range, is trading sideways, okay? And that one's a pretty easy one to look at because it kind of hits you right in the face, okay? The S&P was a little bit difficult because, you know, we were consolidating a little bit and then we poked our head above that range, okay? Go to natural gas, okay? And look at the first thing I do, zoom out, okay? Starting to head down. So, natural gas, bearish cross. What's a normal thing for the market to do? To gravitate toward this BBC. That's what we're looking for the market to do the normal. Okay? The good thing is the cycle is red and the green line is pulling away. So we do have some of that separation. All right? So with the natural gas, it's not moving and shaking right now. But what you would do is activate your trend line and get ready to draw something. Okay? Get ready to draw a trend line underneath it. For the moment, let it play out here and we'll come back to that. Okay? Let's try to look at some things that are really moving. So I'm going to go to the currencies. Okay. Notice the first thing I do is zoom out. Get in the habit of doing that. Okay. We got a little bit of dynamic support here and a double bottom. So before we get excited about getting short, we want to break dynamic support here. Okay. So right now, the euro, we're waiting for the market to move, break out of this little range, either up through here or break down. Okay, so the euro is off the table. Swiss franc, I pulled that up. What's nice about this, we have the Polish cross. Okay, we're getting the normal thing, which would be the pullback to the BBC. The cycle is blue, and the green line is underneath. Few things to point out here. Number 1, we're not trending, so be careful. Number 2, it's nice that the cycle is blue, and it's nice that the green line is underneath it. We have that separation, but it's flat. Okay, it's at about the midpoint here. Okay, we want this. That's what we want. We want that. Okay, Right now, this is like rolling a boulder up a hill right now. Okay, it's telling me it may not have a lot of energy. Okay, we want slope to it. That's kind of what we get crazy about. Okay, so the Swiss franc, I just threw it up there just to see what was on there. No trade. Japanese yen. Okay, another one. Are we trending? No. Triple top. Double bottom. Okay, so what I would think is if the yen started breaking down here, then maybe we would look for shorting opportunities. Okay, I would kind of lean toward that way. Why? The cycle is red. Okay, it's got a nice slope to it. So maybe the yen is in the position to go down, but not right now. All right, so that's a good question. So the colors here at the midpoint are changing constantly. What's the point of that? There isn't. Okay, nothing fancy about it. Okay, means nothing. Okay, what I would concentrate, I like the fact that you're thinking about color, AM. Okay, I want you to be thinking of color on the slope of the cycle. Is it blue and has a good slope to it? Is it red and does it have a nice slope to it? Okay, that's what I would circle. That's the key. Okay, but everything in between here is just, I think it's just eye candy for now. All right, let's switch guns. Go back to the ES. All right, so there was that short right here. That was the pullback to the BBC with the down close. Again, I cautioned everyone because we zoomed out and we had some potential support over here. Yes, it worked out. Okay, but here we're kind of just stuffed here, right? Zoom out. We're still a little stuffy in here. Okay. All right. Let's see if we can't find anything else. Okay. Crude is breaking down, right? Notice the first thing I did, zoom out. I don't know how many times I can tell you that. I'm not asking you to go to a 30-minute chart or an hourly chart. Just zoom out, okay? It's sideways, okay? But the crude is breaking down and we're starting to get the bearish cross. Why is it bearish cross? Because the cycle is red and starting to pierce the BBC. What it's doing right now, okay? That is the bearish cross right in here, okay? I'm going to do this. That's the bearish cross, all right? All right, so crude is fighting a little bit of support here, so we'll see what happens. We'll come back to this. All right. All right. NASDAQ. Yep. I'm going to look at the NASDAQ, guys. This is like driving a race car right now. Easy and obvious that this thing is trading sideways until, well, right about now. Here's an idea for you guys that are just want to trade the NASDAQ. I need the NASDAQ. I need it. I need it. I need it. Take that 4-tick range and take it to an 8-tick range. Okay? That will slow it down a little bit. Okay? But then your risk is twofold, right? So you don't have an 8-tick stop in. You have a 16-tick stop in. Okay? So that's a solution for the NASDAQ if you really want the NASDAQ. Because when the market's doing what it's doing right now in a 4-tick range, good luck. You're not going to catch it. So a solution for you, maybe go to an 8-tick range chart and slow it down a bit. Okay? Because look at here. We had the cross here. We had the bullish cross. And we did have a pullback to the BBC with the up close. Okay? We had the bullish cross, pullback to the BBC with the up close on this candle, and we have bullish divergence. Okay? The same rules apply. Are we trending? Now you're looking at an 8-tick range chart. Okay? Same rules apply. Are we trending is the first thing. Okay? So if you're going to trade the NASDAQ because you really need that guy, okay, 8-tick range might be your solution, okay? But then your risks double. Same with the YM, okay? YM on a 4-tick range might be impossible to trade because it's popping all around, okay? Consider going to an 8-tick range. Same rules apply. In this example, we have a bullish cross here, right? Are we trending? Okay, we're kind of stuffed up here, right? We got a double bottom here in play. We got a top here in play. The only thing it's got going for it really is that we did break dynamic resistance here, right? But we do have the bullish cross. So some potential there. All right, and then the S&P, we know we're stuffed up here, right? Would we all agree? Okay, this isn't a trending market. Okay, that's an 8-tick range. That's a 4-tick range. We're not trending. Okay. Before, when we poked our head above here, we took it. Okay. But look, we got stopped out. Maybe there was good reason, because were we really trending back here? Look at, there was resistance here. Did we really break out of the range? Maybe not. Okay. Maybe that's why we got stopped out. Okay. So you're going to find, if you're having a little bit of trouble, that's one of the big things. Okay. That'll be one of the big things, the trap you fall into. All right. So let's look around. Let me go back to that natural gas. All right. So let me talk about the nat gas. And this is in reference to drawing a trend line. Okay. Mark, the trend line starts like this. Okay. Starts at the bottom of the wick and then the shoulder of this candle here. Okay. Now, we poked our head below it, but we're back above it. Adjust the trend line to this wick. Okay, so again, it started here. It takes 2 candles to connect the dots. Okay, we poked our head underneath it, but we closed back above it. So now, again, adjust the trend line. Okay, so what's gonna have to happen is either we get to the BBC and do the normal thing, okay, fall apart, or we'll have to break this uptrend line in order for us to get short. Okay, the good thing is, okay, maybe it's got some legs to go because there was some energy on the way down. This is a nice sloping action. That's the stuff you kind of want to see when you're looking to get short. So that's how I would draw the candle. In fact, this might happen while we're here. So let's see. We have the bearish divergence. The cycle is red and the green is pulling away. We have the separation. Okay, so that's valid. So all we're looking for is a close below the trend line if that happens. All right, let's see. Come on. Now it's going to fall asleep on us. All right, we'll let it sleep and we'll go fishing somewhere else. Yes, so you're touching both of the bottom wicks. Okay. Start with the wick. There's no wick. Corner of the body. Started there. Now it looks like this. Wick to wick. That's what it looks like now. All right. Yes, I keep looking back there because it's moving, so that's something to sink our teeth in. Again, we're stuck in the range. The NASDAQ, 4-tick range chart. Let's change it to an 8-tick range chart. Okay. Here's something to talk about right now. This. All right. In a bullish scenario, we want the cycle to be blue, have a good slope to it. Okay. And we talked about, and Michael he'll take trades as long as we're flat. We can have red and blue, red and blue, red and blue. Okay, but the rules apply. We have to close above trend lines, right? For that to happen. Okay. Highest probability, everything's the same color. When it turns color on you like it does here, then it requires a trend line. Okay. It requires a trend line before we can get in. Okay. It's red, blue, requires another trend line. Okay. Now, this starts happening. This is a big disqualifier. When this turns red and starts going down at a 45-degree angle, okay, no longs, okay. Ideally, we want everything to be the same color like we saw over here, but when it's the wrong color and sloping down against you, all bets are off. Take the trade off, okay? Okay, and if you're not sure whether that's a 45-degree angle or not, even if you even have to ask yourself the question, just take the trade off the table. No trade. That's a disqualifier. Okay. A quick way to get rid of, if you've got in the habit of drawing a bunch of trend lines here, if you hit the select all and hit the black X, it'll close out all of your trend lines. Okay, let me switch guns here. All right, crude oil again, down by a support, but we do have the bearish cross. Okay, so normal would be to pull back to the BBC. Here's that natural gas mark. This might be the close below the uptrend line that would light the match for the market to go down. Okay, this would be more of a bearish opportunity. The cycle is red, and the green line has that separation or pull away or the divergence. All right, that's more of a bearish formation there. Okay, if we get it down close. Okay, let's go to, we didn't talk about gold. Gold's been on the move today. Okay. All right, well, here's a good example. Should have looked at this from the get-go. Bearish cross, pull back, that's step number one. Okay. Step number two, the normal thing for the market to do is to gravitate toward the BBC, that's this green line, and close in the direction of the trend. It does here. Your eyes gravitate toward the slingshot. The cycle is what color? Red. The green line has that separation or that divergence. So we have a big hole here. That's stuff you really want to look for. Okay? So this is a shorting opportunity right here. Okay? In the end, it resulted in a break-even trade. We went down 4 ticks. Your stop would have been moved to break-even. Okay? But right now, that was a trade setup. The result was a break-even. But it had a lot of the stuff that we want to look for. So that's why I'm bringing it up. Right now, we have dynamic support building. So we want gold to get below that support line before we take any trades to the downside. All right, so for the moment, gold's off the table. Okay. Okay, another perfect after the fact, which I hate doing, but you would expect it if the gold did the same thing. Bearish cross, we expect the market to rut. The normal thing is for the market to pull back to the BBC and close in the direction of the trend. Not only that, the MA1 was red and the cycle was red, right? And the green line is pulling away. So all the variables were there, okay? It took a little bit of heat here, but in the end, what you expect to happen is the green line to come into the cycle and try to close that gap. Ultimately, it does it right here. But again, this is another setup, okay? Let's see if the S&P is breaking out. Almost breaking out. Man, this NASDAQ is choppy, okay? Look at the Dow. I'm going to try to slow the Dow down with an 8-tick range here, okay? All right. Okay. A little bit of resistance here, and we got a little bit of resistance here, so I'm not sure how much we got going on here in a trend. But I got it on an 8-tick range chart, okay? So let's see what happens, 8-tick range. So if you're going to do that, your factors should read 16 on your bracket. Again, to activate the bracket, you're going to left click on the Tinker Toy triangle. Bottom of the DOM opens up. Just select buy stop or sell stop and change your factors. Okay. See what happens with this one. I normally don't do this in this hour, but I'm looking for stuff to show you win, lose, or draw and kind of pick it apart so we can evaluate what we're doing. Okay. And the reason why I went to an 8-tick range chart was to slow this crazy action down, the popping. That was, I think, AM. I want to say it was, I used this one, I think, right? I think it was the Euro. 1145, yeah. Yeah, it was this one here. I used this one because we touched the BBC, we had the down close. Okay. Stop would have been 114.56 and a half. Just missed the stop and then it started. No, it did. This is the candle that lit the match. Okay. All right, 1 second, my phone's buzzing. Yeah, it's this one. And you know what? If you didn't see this one, there was also one here too. So this one is the one you gravitate toward because you're like, ooh, this is a juicy one right here. But actually, in the heat of battle, if you saw this one, it might have been that one too. So I gave you 2 opportunities, really. Okay? And here we're getting possibly a third. Okay? But this is turning a color on you, right? Right. That's the one that'll hit you right in the face. Okay? But there's a possibility here, right? But the cycle is a different color. Okay? All right, so anyway, let's try our mini Dow here. All right, so that's the 4-tick range chart. I'm switching it to an 8-tick. All right, so now we're getting the pullback to the BBC, right? Here's the trend line. Okay, the trend line, we just get in the habit of doing it. The cycle has turned color on us, right? So now it's required. Why is it required? Because this is turning a different color. So we have to close on the other side of this trend line before we can get long. Okay. Okay. You would have to adjust the trend line. Okay. Started like this, but now it's like this. And now the problem here, it's starting to curl over, right? That's a big fat warning sign to stay away from it, okay? So for the moment, we'll stay away from that trade, okay? Because this is starting to curl over. Okay, so no matter what happens from here, we'll just stay away from the mini Dow. I went to the 8-tick range chart. Actually, that might take off here, but I went to the 8-tick range chart, guys, and I'm advertising that a little bit because if that 4-tick range is too fast for you, like it is for many, including myself, all right, one way to slow it down is go to a larger time frame, okay, and that'll slow it down. But keep in mind, the risk now is not 8 ticks, but you have to double everything. If you're doubling the time frame, your risk is commensurate with the time frame that you're on. Okay? So here's the scoop. See, the reason why we're kind of trading in a range here is because maybe this thing is curling over. All right, so I'm going to get off the 8-tick range again. Back to crude oil. I zoom out. Okay, now we're starting to trade below this congestion. Okay, that's a pretty good sign. All right, so what I would be looking for in the crude is any pullbacks to sell into. Okay, again, you traded sideways for a while, right? Now we're starting to break out of the box here. Okay, so I would look for maybe crude to pull back here to the BBC and look for any selling opportunities. Okay, so you're going to need 2 green candles for that to happen to start drawing a trend line. Okay, so let's see if that qualifies. Okay. Oh, okay. Yeah, I'll send you an email. It's easier. It's not very hard. But it's just, again, it's just going through the rules over and over and over again, okay? Until it becomes easy and obvious, all right? So, again, in the crude, we're looking for the market to do the normal thing, and the normal thing is for the market to get back to the BBC. I do have a video on the DOM, so I can send that to you, okay? So if we get another green candle here, I activate the trend line. We can get ready to do one of those, okay? So let's see what happens. This will be our last one. It's a little over 2 o'clock. Another green candle here, and we'll draw the trend line. 49. Yeah, yep, I will. Gain did some new videos on it, so it's actually pretty cool. All right, so now we could draw the trend line. That's how it should be drawn. The bottom of the wick, corner of the body, okay? So obviously if we close underneath this uptrend line, okay, it'll be a momentum trade because we'll be below the MA1, okay? But let's see if it does the normal thing, pulls back to the BBC. What you should feel comfortable about is that we broke dynamic support here, okay? And we have broken out of this box. So we'll see what happens. Just waiting for it to fire here, okay? Just hang in there. Okay, so it's starting to do the normal thing. Okay, so now This has turned color, right? So now it's required to close below the trend line. All right, again, it's almost one of those Michael trades. The high was 55, then the low should be 51. Okay, the high is 50. The order we place is 63.5. Okay, the high is 55, subtract 5, and 50 is right here, and that should put us below the trend line. Okay, so let's see what happens. If this starts curling up at a 45-degree angle, then we're going to take the trade off the table. Okay, what if it touches the BBC? Good question. Well, we'll do this. Cancel all, pull the order. Okay, what we also might have to do is adjust the trend line. That's a possibility. But even if it falls back to the BBC, because this has turned color on us, it has to close below this uptrend line. All right, so when this turns color on you, two things are going to happen. Number one, market's just going to take off, and this is going to disqualify the trade. Or number two, it's just going to fall apart. But in the meantime, you're going to be drawing that trend line. Because in the end, as soon as it turns color on you, you have to draw the trend line no matter what. So that's why you get in the habit of just drawing them ahead of time. Okay? Because right here, there was two reds, right? This was red. It's this price action that turned the cycle blue. You got the trend line drawn already. So you're not fumbling. You're not trying to get a trend line drawn after the fact. It's already there. So that's what you're doing. You're trying to, it's just a process. Number one, are we trending? Yes, we are. Check. Do we have a bullish or bearish cross? We do. Check. What's my third thing? Okay. We did not close below the uptrend line. We did not close below the uptrend line. Okay, that's still above it. So it's kind of a funnel. Number one, are we trending? Number two, yes, we are. Okay, number two, do we have a bullish or bearish cross? Yes, we do. Check. Number three, engage the trend line. Number four, I need two candles to draw a trend line. Okay, I got a trend line drawn. Okay, number three, is the cycle the same color? Yes, it is. Great. You know, you're going through just the motions. Okay. All right. So we're not below it. If we close back above it, guess what, Mark? We're going to have to adjust it. That's what we would have to do. Starts here, we'd have to adjust it here. All right. So it's kind of hanging around here. So I don't want to stare at it. One more time. ES. Dow. Man, it did take off. All right. Anyways, that's a scoop. Okay, I think we're going to start looking at paint dry here. There'll be some fireworks here in the next 20 minutes. Oh, AM, this is what you do. That's a good question. So here's AM, you might have something like this, right? It just keeps going on forever, right? So what you want to do is just put your mouse over the trend line and right click. Select properties. Okay. So you have a long trend line. Right click over and select properties. Properties box will open up. Okay. See where it says mode and mine's set on finite? Yours should look like mine. Yours is set to infinite. Okay, it should be set to finite. You can also change colors by left clicking on this. Okay, you can make it a different color. Some of it's pre-defaulted as gray. Okay, I would change it to black so it's a little clearer. You can thin it out. Mine's on a number 2. You can change it to a number 1. Okay. And then in the end, what you might want to do is save it as default and then hit close. Okay. That's a quick solution. All right, so we're done. I hope you guys got some value out of it. Brand new guys, those are the things that you're going to see inside the trade room. The traditional slingshot setup has been around from day one. There's other setups that have happened along the years. The 137, 164s, all that other stuff. This one has been around from day one. That's why I always go back to this one. Get in the habit of zooming out. That means hitting your zoom out button. Okay. Number 2, get in the habit after the cross, drawing trend lines. Why do we do that? We never know if it'll get back to that BBC or not. So we want to be prepared in the event that it happens. Okay. The other thing too is the DOM. Get that bracket set. All right. Get it set up so you're not fumbling around. The less buttons you're pushing, the better. Okay. This will do it for you. Then all you have to do is drag it up, drag it up, drag it up. Okay. It'll place the stop for you. Be aware of the slopes of the slingshot. That buzzword, this is the slingshot. Okay. Ideally, you want a slope. Okay, you want a slope that's down. Okay, actually more like that. Okay, we don't want flat. Flat is no good. All right, and definitely if it's the wrong color and pitching a 45-degree angle against you, that's definitely a disqualifier. Okay, that's it. Oh, and the last thing we covered, look, if this YM or this NASDAQ, if you need, if you need this, slow it down. You might have to go to an 8-tick range chart, but remember, your risk factors just double. It's one way to slow it down. Okay? It's one way to do it. So that's it. All right. I'll be in the room tomorrow morning with Mike, just hanging out. So if you got any more questions, you can email me or call, and we can exchange emails. I owe a few videos and emails to people, so I'll do that. If I forget, don't get upset, but I'm going to do that as soon as I get off the air. Okay? See ya.